I've helped a lot of people navigate short sales, and here is the truth about how the process actually works. Of course, you can go look for the 20-second TikTok and attempt to understand what's going on, but if you really want to know from start to finish what a short sale looks like for both buyers and sellers, then this is the video for you. Let's get into it. All right, guys, I'm going to try and go quick. I'm going to leave out a lot of the fluff and just get to the point. So what is a short sale? First of all, let's just go over what an example is. Someone owes $500,000 on a property, and the current market value is only $450,000. So they're upside down. Obviously, in order to sell a property, they might pay real estate professionals. So you got commissions. You also have title and escrow and other miscellaneous fees you're going to have to pay. So you got a cost of selling a home. I put in 7.25%. It might be higher, it might be lower. It depends on your market, depends on what you are doing. But that's going to put you in a situation where we have $450,000 as a sales price. We've got 92.75 as the net, so that's minus the 7.25. So we end up with $417,000, or it's short by roughly $83,000. So if we were to sell it, we would have to sell it for short of what's owed on the mortgage. We would have to get permission from your mortgage holder, the bank, to do that. So that's what a short sale is. So when would you do this? Well, first and foremost, you need to be no longer able to make your payments. So if you can still make your payments and you're upside down, they're not going to approve a short sale. You need to make sure you're upside down, obviously, because if you have equity, you'll just sell the property and pay the bank off. So then the last one, they're going to be looking for some sort of financial hardship. Like, what changed from the point where they loaned you the money to buy the home and now you can no longer afford it? That's, the three key criteria. So what are the pros of this? Well, I guess before we go into the pros, you probably need to understand your options. Let's assume you can't afford your payments, you're upside down, and you've had the financial hardship. So you don't have to short sale. You can just walk away, right? And there's two ways to do that. You can do a deed in lieu of foreclosure. So you literally just call the bank and say, hey, you're taking my home back. I'm not making payments anymore. Good luck. A deed in lieu of foreclosure is you literally sign the home back to them and they take possession right away. Some banks might agree to that. Some banks might tell you to kick rocks. You can just ignore it altogether and walk away from the house and either stay there until they kick you out or literally just walk away and get foreclosed on. They have foreclosure rights in your mortgage paperwork that you filled out when you originally took out the loan. And then the last option, the third option, which is what we're going over today, is the short sale option. So there are some pros to you in doing a short sale. The main one is, how much will it impact your credit? And then how quickly can you buy another home? Those are the main benefits of doing a short sale, because when you're working with the bank and you're showing them that, hey, even though I'm in this hardship and I can't make these payments, at least I'm working with you. And creditors like to see borrowers who work with them. They don't like to see people who ignore them or just walk away. So let's dive into those pros. It's better on your credit score. How much better? It ranges, but a short sale is probably going to hurt you between 100 and 150 points on your credit. Foreclosure is probably going to be 150 to 200 or more. And the big one is the purchase. Typically after a short sale, you can buy it in as quickly as 2 years from when you did the short sale. And that clock usually takes place once you close on the property. And then foreclosure would be up to 7 years. So it depends on the loan type you're doing, et cetera. So, okay, let's dive into some things that you need to consider. So if you're in a position where you're actually short selling, so we're talking to sellers now, I am going to answer questions about you maybe considering buying a short sale. So stay tuned, or you can just fast forward to the end. I don't know exactly where it's at, but it'll be here a little bit later. This is mainly for sellers right now. So things you want to consider and be aware of if you do a short sale. Hey guys, I paused the video. I paused it super fast. I just want to say thank you so much for watching this. And if you're getting anything out of it, anything of value at all, do me a favor, hit that like button. It helps me out a ton. Thank you so much. And now back to the rest of the show. Number one is deficiency judgments. So some states allow for the lender to get what's called a deficiency judgment. This is like, hey, go back to that scenario, we sell it short by $83,000. Some states will allow them to, the lender would say, hey, your short sale's approved, and we're going to put a judgment against you that follows you everywhere you go, and it's on your credit for $83,000 until you pay us back. So that's a possibility. Now, if you are doing a short sale, you can negotiate or attempt to negotiate them to waive the deficiency judgment in writing. So check your state, and then, of course, check with the lender if they will waive it. There could potentially be tax consequences. So there's something called a 1099-C, and that's essentially a tax form where the lender would actually say, well, hey, we forgave this $83,000, and it's treated like income for you, even though you never received any money. You just were forgiven debt. So you want to make sure that that's not a part of this process either. You might check with an accountant. I am not an accountant, nor am I a financial advisor. So you might want to dig a little bit deeper on that. And then occupancy and property conditions. So they typically, if they're going to short sale, they want to make sure you're in it. They want to make sure it's in pretty good condition. The banks will rarely do repairs. So just keep that in mind. And then communication and timing. It can take a long time to get the short sale approved. I mean, I've seen it take 2 years before. It can take as quickly as, I've heard, allegedly, 45 days. I've never seen that personally. It's been like 3 or 4 months is the quickest I've ever seen. But, it could be anywhere from 3 months to 2 years. So just keep that in mind. All right, so what does the process actually look like? Well, here's what you do. First of all, you got to be behind on your payments. Now, I've had scenarios before where I've had sellers come to me and they're like, Chase, I owe more on the home than what it's worth. I don't have money to write a check to cover it, because that is another option. I guess we didn't go over that, but you owe $83,000 more than what it's worth, and you can't make the payments for whatever reason. I guess hypothetically, if you could write an $83,000 check, you're good to go. Or you could borrow $83,000 from some facet and maybe pay that off. Pretty rare. But I have had sellers come to me and they're like, hey, I owe more than what it's worth and I want to walk away and I want to short sell it. And then they're like, let's go. And they're still current on payments. The bank will typically not even work with you. They won't even talk to you about a short sale if you're not behind on your payments. Why is that? Well, I mean, the only thing I guess I can think of is that if you're still making the payment, the bank's happy. They're not going to agree to wipe off $83,000 of money you owe them if you're still making payments every month. They'll just pretend like nothing's happening and drag it out and wait until you do miss a payment. So first and foremost, you got to be behind on payments. I'm not encouraging you to miss your payments. I'm just telling you what I've seen. Secondly, you need an offer on your property. They don't know how short it's being sold until you have an offer. So you've got to get an offer on the property. And then you need to submit a short sale package. Every lender has their own package. They require certain things about your income and bank statements and financial hardship letter. Those are all things that they're going to be looking for. And then, of course, timing. It can take time. It can take a lot of time. So best practices, before we go into timeline, something to consider, because this is a little bit tricky. I would encourage you to find a professional real estate agent that has handled a short sale before. Now, of course, you could potentially do this on your own without an agent, just like you could buy and sell real estate on your own without an agent. Something like 90% of all real estate transactions have a real estate agent involved, and those are just normal transactions. When you get into a short sale, there's a lot of complexities, and if you're not used to dealing with the bureaucracy of banks and hounding them for information on a day-to-day basis, and you don't want to deal with that, do yourself a favor. Find someone who knows what they're doing in your area and get them hired. From a commission standpoint, you're doing a short sale already. They're going to have to negotiate their commission with the bank anyways. So I wouldn't worry about the cost of it so much. as getting success in the short sale process. So now let's look at timeline. All right, so the timeline, market the property. Typically going to take about a week to get some offers. You're probably going to have to market it under market value slightly. You want to be careful because the bank needs to approve the price that you're selling it short, and they're going to verify what it's worth. So, yeah, there's that. Then you have the package submission. This is typically going to take 1 to 3 weeks before they actually receive it. Just is what it is. I don't know if they still do this because it's been a little while, but they required us to fax everything. And this is like when I was dealing with short sales on a daily basis. This is probably 13 years ago. But I would not be shocked at all if they are still requiring fax today. Banks are not very efficient and they're not very convenient from my experience. So, all right, let's take a look at the next one, which is the review of your package and then the BPO or appraisal. So what's a BPO? The BPO is a broker's price opinion. They might hire a local broker to go do research and tell them what they think the property is worth, or they'll go hire a third-party appraiser to go look and perform an appraisal on the property. And that can take 3 to 6 weeks or significantly longer. The biggest thing is the review part, right? Like them getting the package, actually reviewing it all, and then starting to work with us. Then lastly, you're going to negotiate and get the final approval. Notice this is probably like basically 3 to 4 months. Just be prepared for it to take a lot longer. It could certainly be the case. So how can you speed it up? You can complete and make sure you submit a clean short sale package immediately. Again, this is where that expertise, maybe hiring a real estate professional who's done this before can really, really, really save you some time. If there's secondary liens, they need to be negotiated. So every lien holder, and just so you know what a lien is, your mortgage is a lien against the property. What that means is that they need to be paid off before you can sell the property. That's all that means. So what are some other liens? Maybe you have your mortgage, your initial bank loan that you got. You might be late on HOA fees and they've liened your property. You might have hired maybe someone subcontractor to do some work on the property and you didn't pay them. They could lien the property. You maybe got a home equity line of credit. That's a lien on the property. And all these liens come in different orders. And every single lien against the property needs to agree to the short sale. So if you're, let's do 3 liens here. You got your original bank loan. Then you had a home equity line of credit, and then you had an HOA lien. All 3 of those need to approve the short sale. So if you're the home equity line of credit, you're going to want some money. Otherwise, you're going to say no. So you just need to understand that, and some of this is nuanced. It's a little bit difficult to say without seeing your exact scenario, but you need to understand that they might not approve the short sale. So how do you navigate that? Maybe you get the first lien holder to carve off a little tiny bit of money for the second lien holder. That's a possibility, but it's got to make sense for everyone involved. And again, this is a little complicated, so I can't answer your specific scenario. But again, if you hire a real estate professional that knows what they're doing, they might be able to give you some anecdotal advice based on their personal experience. So one mortgage servicer can make it faster. If you got multiple mortgage servicers, it could be a significantly longer haul. And then, you want to make sure you have a great offer. Because it's going to take so much time to get this approved, the buyer has to be on board the whole time. So a normal purchase for a buyer, and you buyers who are considering short sales, pay attention here. A normal purchase is like typically 30 to 60 days. So you pick the home, you negotiate the offer, you go through the home inspection, you get the appraisal done, any other potential inspections, and then you close. In this short sale scenario, you're going to write an offer and then you're going to wait 3 or 4 or 5 or 6 months to start negotiating with the bank. So you already have an accepted offer with the seller, but it basically doesn't mean anything because the bank has to approve it. So I just want you to be prepared as a seller to get a strong offer with someone who knows the process. Make sure their agent knows what's going on. Make sure the buyer knows what's going on. What you don't want them to do is write an offer, then 2 weeks later, they say, oh, we found a better house, buy. And now what? What I would do in that scenario is you basically just ride with the bank and still submit everything as if it's good, and then let them know once they respond to you that you need to get another offer. But hopefully by then you've at least gotten the bank to start to do the BPO and the appraisal. So anyways, best practice, get a strong buyer who wants to stick around. And then updated documents ASAP. And short sellers are going to be asking for documents all the time. Do not drag your feet. They'll ask for a document, get it to them the same day, even though they might not review it for a month. I would still encourage you do it fast. All right. So what could slow it down? FHA loans, there's just more bureaucracy and layers when you're dealing with a government loan. Multiple lien holders, as we already said, if you're having to negotiate with multiple lien holders, they could really tank a deal. So this is where having someone with a lot of experience can really benefit you. And then mortgage insurance, you get the mortgager and the mortgage insurance companies arguing over who's going to owe the money. And then missing documents can really slow it down. So that short sale package, I said submitting a clean short sale package early on, make sure all the boxes are checked and they have everything they need, because you don't want to wait 3 weeks for them to review your package only to find out they're missing one document, and then you go back into a 3-week pile until they get to you again. And then pricing disputes. You want to get a good offer up front, as close to market value as you can. So hopefully you're not arm wrestling over money down the road. Now, the lenders can switch negotiators. This can happen, and unfortunately happens frequently. So that can just drag the process out. And that could happen if let's go back to that short sale submission package. You missed a document, and then they ask for another one, and then you get it to them, and then they take 3 weeks, and they're like, hey, I'm off this file, or I don't even work there, or I got promoted, and you got a new one now. Like, who the hell knows? There's just a lot of hoops to jump through. So, all right. What does this look like for a buyer? So I told you I would answer buyer questions too. The biggest thing I would want you to be aware of as a buyer is all those things are happening, okay? And you're along for the ride. So it's everything you just heard, plus your accepted price with the seller might not matter at all, okay? So you think you got some smoking deal, it may or may not be the case. So that's the first one. The second one is you need to have a lot of patience if you're considering buying a short sale. I really want you to be aware that this is going to be a long process. You will want a deal, but understand the bank has to approve everything. So, just because you beat the seller up and got the smoking deal doesn't mean anything until the bank approves it. And then the last one, I want to make sure you're protecting yourself. That's the second to last one. I want to make sure you're protecting yourself. So how do you protect yourself? Well, in a normal buying scenario, you're going to be doing that. The process is pretty early on, right? You're going to write an offer, you're going to accept that offer, then you're going to start to do your inspections to protect yourself. You're going to do inspections, you're going to do appraisals, you're going to do all that stuff. Well, you don't want to do that on a short sale early on. Why? Well, because you don't want to spend thousands of dollars on inspections and appraisals when you don't even know if the bank's going to sell it to you. So you still want to be protected by inspections and appraisals though. So a very simple clause that says, hey, buyer chooses to have an inspection time frame to start upon the bank's approval of agreed upon price. So now you've got an agreed upon price. Now you can start the inspection process. It doesn't mean the seller is going to fix anything. So just keep that in mind. The seller's doing a short sale. They probably don't have any money to do any repairs. So just be aware of that. Now, by the way, Mr. and Mrs. Seller out there, if you do have any extra money, it could be the difference between getting this approved and not. For example, if the buyer has a loan and maybe there's some repairs that have to be done in order to move forward and the buyer doesn't have the money to pay for them, maybe if you had $500, it could get the deal across the finish line. Or like the HOA dues, if you didn't pay those and you got a $700 lien against the HOA, that might be the only reason you don't get the short sale approved. So, just keep this in mind. Like there might be some little back at the end negotiations you have to do to get this thing across the finish line, whether you're the buyer or the seller. So protect yourself. Make sure you have your inspections and your timeframes right so you are protected. And then the last one is, ideally as a buyer, you don't need the property. Why do I say that? Because the timeline is so undefined or indefinite, like we have no idea when you're going to close. You don't want to be like in a scenario where you have to be in a place in the next 6 months or 9 months. I've just seen so many people who are like, oh yeah, I've got time. And then you get 4 months in and they're like, Chase, like, what's going on here? We got to have it. We're panicking, blah, blah, blah. Like, you might not be the right candidate to buy a distressed short sale property. Because I've seen people get all the way to the finish line 9 months in and the bank comes back with some ridiculous price that's not even market value. And you're never going to buy it as a buyer. So you just basically were on hold for 9 months. So ideally, you don't need the property. That's all I wanted to say. So, all right, guys, that is it for short sales. If you're finding yourself in this scenario as a seller, I'm really sorry. And you will get through it. I promise you. This is a great tool for you to use to get through it. And hopefully in a few years, you can get back on your feet. If you're a buyer, this might be a way to get a great deal. I guess I should just say thanks for watching this video at this point. If you got valuable information, hit the like button. Please subscribe. I'll have other videos just like this on all sorts of topics. So real estate, investing, whether it's stocks or trading or talking entrepreneurship, and our podcast, the Not a Financial Advisor podcast. I just appreciate you guys following along. I hope this is valuable for you. If you have questions, put them in the comments below. I'll do my best to answer those. And again, for those of you navigating a short sale, this too shall pass. I hope it works out in your favor. And thanks again for watching.